General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock this workout. Today's the 30th. Let's see what we got for plans. NASDAQ 15. Okay, what low is this? Okay, it's Friday's low. This is Monday's low. So Sunday, Monday, we just basically did a little retracement expansion. We missed the internal range liquidity. New York pushed down. Well, we got us a little retracement to this. 30, yeah. Nice little rejection there. Set New York reversal daily profile. Let's look at the H1. Kind of got order block vibes here. I don't really like that high. It looks like a weak high to me. That's our only real gap. We got one in premium, or the remnants of one. New week opening gap. Like this. This is an order block down here, I believe. Some weekly equal lows. I believe we took those out. I can take these out. Yep. So this is, we don't need this no more. See if I'm even grabbing it, because it don't look like. Okay. Alright. Took that out. What do we have next? I believe that's an order block. Hold on. Probably the breaker. Daily order block. Wow, this is from July 2025. Still no sign of retracement. And this is a pretty large range. Monday. Go with the OTE idea. Wow, regular trading hours was right at 50% of this range. Interesting. Regular trading hours, we opened up here, kind of OTE, and then dropped all the way down. This is our new swing here. So retracements tomorrow will have to be from 50 cent to 705. That'd be like our OTE zone. Tuesday 10 o'clock news. What time is this? Tuesday. Okay, we can like this. Hold on. Make it a color. Just make sure the coordinates are perfect. What is this? 145.1. 23144.5.1. 23255.2. It's perfect. Trigger. Yep. Okay. Message retracement area. That works. Shout out to the alerts on the boxes now. So we can look for a sale somewhere here. Turn range liquidity, but we don't really need it. I prefer here, leave this alone. This is a pretty decent swings low. You got a weak low here. Anything above this, we bullish, really. This the real turn range liquidity pair here. It's failure swing liquidity. We go top right, this label. Retracements, lower prices, makes sense. Retag this low, makes sense. First TP off of OTE makes sense, which would be 22731.5. Then we can take this off because we don't need a bunch of drawings everywhere. And put this here. Alright. See what I did here. Price is bearish. Or retracement to sell. No, 10 a.m. news tomorrow. Could provide a pivot, but could provide a pop for retracement, but not a catalyst for reversal. It's a war going on outside. Let's look at the daily time frame. Just closing price. Okay. We spent all this time going up and we closed here. So we really tried to push today. We do have a gigantic fair value gap. We'll make it red. It's bearish. Sales into the wick. This is when ICT bring this down. weak zone. Take the snap. I do. I think that's how it goes. Yeah. Prices, levels. Give me a color. Give me a bit of color. Oh, really here. It's 50% of this wick here. Let me see if I can change this one. That's clean. I think we could get a reaction here. From the dailies, there is a low. These are relative equals. That's an old gap. Notes how price tried to rally. Tried to rally all day. Pro relief rally. New York reversed everything. That market open. Closed at the bottom of today's range. Alright, so SPX is tone low. Same thing here. So we came to the order block. Control Z. That was wrong. Any major difference? No, not really. Okay. We didn't take Asia low here. Take a look at this. Then we took a low here. We didn't take it. Did not get Asia low. SPX. So SPT is there. On the H1. going on with this? Since I was trying to save. Here we go. So here, it's not the swing. The swing is here. OTE. Bam. Visibility. Bam. Retracement. Be here. Think here. Go to coordinates. 6409.8 and 6. Hold on, wait. I see 351. That's what I see. 351. Is that 8? Yep, must be. This, I can't tell if this is a gap or what we got going on here. It's the order block. It's huge. We sat on it too. I'm gonna respect it. I'm gonna keep it there because we could just use it for the low here. But I do kind of want to put some gauges on this thing. So around here is like the middle of the order block. This will be the TP. Six two nine 2.2. Alright, so we got our idea. We're gonna see retracements up here. We're gonna target here. If we get a push down, we could get some type of setup just to target 50% on Monday, really. That'll be interesting as well. For retracements to sell, price is heavy, so don't chase it. If we can't catch the sale, play the buy to sell back to Monday range, 50%. The daily. Definitely watch this gap or this Wig zone. Wig zone. Trace to the wig zone. Look for some setups. This PX finished. I don't need no screenshot right now. Finished. Has an up candle. Wow. Nasdaq was a down candle. Because it took Asia low. Let's look at SPY or stocks. Let's go here. Is this the daily? That's that daily opening range gap. So SPY finished the down day here. Use the fair value gap we seen. He hit this fair value gap in pre-market. OTE. Oh, every time I do this. Resave this. Because that was ridiculous. Every time. Yep. What is this? 1900. It's crazy how we getting some of these late hours of price action on the stock itself. Nevertheless, stick to the plan. $635.36, $637.85. Perfect. Up on the way. Let's get us a target. 629 or 626. There's an OB down here too. Optimal trade entry. 50% is gonna be crazy. Hopefully tomorrow will be a day where you can just buy under and target the retracement just based on where we at now. It'll be easy to catch that sale or to catch the buy to the sale. And come up here, we can just wait all day till the news. Or just never know when it's gonna sell. So we catch that buy to the sale. Be done faster. Same right here, sell retracements. After premium prices. Let's go here. Those could be those equal lows. Mm-hmm. I do like this. It's because it got the order block there. What is this coordinate? 56217. What is that? 599. $552. Get a few days on these strikes. That'll be the best way, really. I think buy to sell, like on futures or something. And then after the retracement, get some options. Just TP1. Take the option trade. I'm gonna put the put side. Bam. Q. Staying bearish until the war is over. Or May. Or the end of May. Did the framework play out? Yeah, we just letting it run for Monday. What do we learn? Hmm. We don't know what's going on with this war. That's the thing. Like, we'll watch for tomorrow. Let's see what the news is. That's what we'll do. Forex Factory. Tuesday jokes. Okay. Yeah, that's 10 a.m. Joe's job at 10 a.m. All right, that's that on that. We ready? All right, y'all have a good day. Peace.